In this video, we're diving into what the Corporate Transparency Act actually is, who it applies to, and why you really don't want to ignore it. Unless you're cool with $10,000 fines or even jail time. What's going on, everyone? My name's Eric Hunsaker, and on this channel, we cut through the fluff to help you make smarter business decisions, whether you're just getting started or you're already up and running. If you've got an LLC, a corporation, or if you're thinking about starting one, this video's for you. Because yeah, this new law could seriously affect you, and most people have never even heard of it. What is the Corporate Transparency Act? Let's start from the top. The Corporate Transparency Act, or CTA, is a federal law that officially kicked in on January 1st, 2024. It was passed by Congress back in 2021 as part of a bigger effort to stop shady business practices. Stuff like money laundering, tax fraud, and even financing for terrorism. Basically, the government realized that way too many people were using anonymous shell companies to hide money or move it around without anyone knowing who really owned what. So the goal with this law is to pull back the curtain a bit. It's about transparency, making it clear who actually owns or controls companies in the US. Now, before you go thinking this only affects big corporations or criminals, this law applies to millions of regular small business owners too. Freelancers, solo entrepreneurs, mom and pop LLCs. If you've got a business that was formed by filing something with the state, chances are this law applies to you. Why was this law even created? So why now? What's the big deal? Well, for years, it's been ridiculously easy to hide behind a business. You could create an LLC in certain states and not have to list your name publicly anywhere. That kind of setup makes it really easy for bad actors. People running scams, moving dirty money, or funding dangerous stuff to operate in the shadows. Congress saw that and said, we've got to do something about it. So the CTA was created as a way to force companies to report who's really behind the business, not just on paper, but in actual detail. That's where the beneficial ownership information report comes in, which we'll talk more about in a second. Now here's the important thing. This isn't about making your info public or outing you to the world. It's not that kind of transparency. It's about reporting your ownership to the government, specifically to FinCEN, the Financial Crimes Enforcement Network. They're the agency in charge of collecting this info and using it to spot fraud or illegal activity. So it's not about exposing you. It's about helping law enforcement connect the dots if something shady is going on. If you're just running your business the right way, then you're not the target here, but you still need to comply. Who has to file? All right, here's the part where a lot of business owners tune out because they think, oh, this doesn't apply to me. But slow down. If you started your business by filing something with your state, like articles of organization for an LLC or articles of incorporation for a corporation, this does apply to you. That means single member LLCs, multi-member LLCs, S-Corps, C-Corps, and even foreign companies that are registered to do business in the US. Now on the flip side, if you're a sole proprietor and you never officially formed a business with your state, maybe you just got a DBA and a tax ID number, you're off the hook. Same thing goes for general partnerships and most trusts. If you didn't file formal documents to form your business with the state, you don't have to report anything, at least not for now. There's also a list of exemptions, about 23 different types of businesses that don't have to comply. These are mostly larger or heavily regulated companies like banks, credit unions, insurance providers, investment firms, and utilities. And if you run a nonprofit that's registered under the 501c3, you're also exempt. But for the average small business owner, especially if you're operating an LLC or a corporation, you are most likely required to file. What are you supposed to file? The report that you need to submit is called the Beneficial Ownership Information Report, or the BOI report. This report goes to FinCEN and includes two big categories of info. First, you report details about your business, stuff like your legal name, any trade names or DBAs you use, your physical address, the state where your business was formed or registered, and your taxpayer ID number, usually your EIN. Then you report details about the people behind the business, the beneficial owners. For each person, you need to include their full legal name, date of birth, home address, not a business address, an official ID number, like from a driver's license or passport, and a scanned image of that ID. If your company was formed after January 1st, 2024, you also have to report the company applicant, the person who actually filed the paperwork to form the business. That could be you, your lawyer, or someone that you hired online to set it up. If your business was formed before 2024, you don't have to worry about the applicant info. You only need to include the beneficial owners. What counts as a beneficial owner? Now, this is another spot where things can get confusing, so let's clear it up. You're considered a beneficial owner if you either own 25% or more of the company or you have substantial control over the company. That substantial control part is where it gets tricky. You don't have to own any of the business to qualify. If you're the CEO, COO, president, or even just someone who calls the shots behind the scenes, you probably count. So if you own a majority stake, obviously you're in. But even if you're just an executive with no ownership shares, you may still be on the hook to file your information. Think of it this way. If you're making major decisions for the company, FinCEN wants to know who you are. When do you need to file? Now, the deadlines are based on when your business was created. If your company was formed before January 1st, 2024, then you have until January 1st, 2025 to file your report, which has already come and gone. That gives you little breathing room, but don't let it sneak up on you. And if you form your company in 2025 or later, then the deadline tightens up. You only get 30 days after your business is created. So the newer your business, the less time you have to get your information submitted. Do you have to keep updating it? Yes. And this is a big one. The BOI report is not a one-time thing that you file and forget. If anything changes, you've got 30 days to update your report. That includes things that you might not think of, like moving to a new address, changing your name, say if you got married or divorced, getting a new driver's license, selling or transferring ownership, giving someone else control of the business. Even small changes like an updated ID number can require a new report. The government wants this info to stay current. So if they check the database and it's outdated, you could still face penalties, even if you originally filed on time. So make it a habit to update your BOI report anytime that there's a change in ownership or control. What happens if you don't file? This is where it gets real. If you don't file your BOI report, or you file it late, you can be fined $500 per day. That adds up fast. We're talking about $15,000 a month. The total fine can go up to $10,000, and in serious cases, you could even face up to 2 years in prison. Now look, they're not throwing people in jail just for missing a form. But if you're intentionally hiding information or just flat out refusing to comply, they'll come after you. So don't risk it. File on time. Update it when needed. Stay out of trouble. Now, what about privacy? This is one of the most common questions, and honestly a fair concern. When you hear transparency, you might worry that your personal info is going to be plastered all over the internet. But that's not what's happening. The information that you file in your BOI report goes into a secure government database. It's not public, it's not searchable. Regular people can't see it. Only 6 types of entities are allowed to access it. Federal law enforcement agencies, state and local law enforcement, but only with a court order, the U.S. Treasury Department, banks and financial institutions, and only if you give them permission, government regulators, foreign agencies, going through a U.S. agency. So unless you're being investigated or applying for a big loan, your info's staying private. This isn't about exposing you. It's about keeping bad actors accountable while letting legitimate businesses operate as usual. So how do you actually file? The filing process happens online through the FinCEN website. It's free and the form's available now. You'll need your business name, address, EIN, information details, your personal info and scanned ID, and your company applicant's info if you're a new business. FinCEN's portal walks you through it step by step. It's designed to be doable, but if your situation is complicated, like multiple owners, foreign ownership, or weird control structures, you might want help from a lawyer or a tax pro. Just make sure whoever you hire knows what they're doing. There are already sketchy services popping up claiming that they'll file for you, so double check their credentials. To get started, just click the link down in the description, which will bring you to this page right here. And here you can go ahead and file your report now by clicking on that button. So to get started, this is what we're looking for here, this beneficial ownership information reporting, and we'll click on Get Started. So you can either prepare and submit it online or do it as a PDF. Should you DIY or get help? This one depends on how confident you feel. If you're a solo business owner with a simple setup, you can probably handle it yourself in 15 to 30 minutes. But if you've got partners, investors, or complex ownership structures, it might be worth paying someone to do it right. Also, not all accountants are offering this service yet. Some insurance policies don't even cover it. So talk to your provider, see if they can help, and weigh the risk of doing it wrong. At the end of the day, this isn't something to mess up just to save a few bucks. So here's the bottom line. The Corporate Transparency Act isn't a flashy headline. It's a real federal requirement that affects a huge number of small business owners, maybe even you. And while it might feel like just one more thing on your to-do list, it's not that hard to stay compliant if you take it seriously. File your report, stay up to date, and don't let something simple turn into a big legal headache down the road. Anyways, thanks for watching, and if this video helped you out, hit that like button, drop a question in the comments, and subscribe for more videos that help you run your business the smart way, without any confusion. And if you want to get started setting up your LLC or holding company, you'll find links to do so down in the description. These are affiliate links, which means we do earn a small commission when you use them at no extra cost to you. And these commissions really help support the channel and allow us to continue to create free content just like this. So if you end up using them, we really appreciate it. Here on the LLC channel, we cover everything you need to know about forming, managing, and scaling your LLC or holding company, plus smart tax strategies and business tips to help you grow. So be sure to subscribe. But other than that, thank you so much for watching. We'll see you here in the next video.